Hey everyone, welcome to KER Market Quick Take. I'm Cory Fleck,
And I'm Shad Marquitz.
and we are back sharing our thoughts on mostly the precious metals sector, but we're going to talk a number of different metals here. Is quite frankly, we are in a correction mode. It's been just over a month since Shad and I last did one of these, and when we were at the New Orleans Investment Conference, I actually got quite a few very positive comments from all of you that swung by our booth saying how much you enjoyed some of these early on quick takes. Hope you enjoy this one because we're talking in a bit of a different tone here where we're very much in a correction. When we were chatting back in October last, Shad and I kept talking about trimming some positions, taking some gains off the table, not totally selling out, but quite frankly, locking in some profits. And well, we've been in very much a corrective phase right now. Gold and silver are both off of their highs, but not that much. I think gold is less than 10% down from its high. Silver, a little bit more than 10% down. It's a lot of the stocks that are correcting more and a lot of the junior stocks that are correcting more. I still think these majors are holding up fairly well. Even GDX is holding up better than a lot of these juniors, but let's face it, these juniors went on an absolute tear over summer. The last time that gold was in more of a sideways correction, then gold broke out and it was party on for when we turned into the fall. Now, this correction that isn't just precious metals, but that's where we'll start. It's taken hold, and I'm sure we're all watching some of our stocks, especially the smaller ones, correct with, again, metals price that isn't doing much. So, Chad, share your outlook. What are you seeing out there?
Yeah, I mean, when I look across the board, it seems like almost every sector has had weakness over the last few weeks. So whether it's the gold and silver stocks, the rare earth stocks, uranium stocks, even some of the copper stocks sliding a little bit, general equities, the cryptoverse. So it does seem like it's a selling environment the last couple of weeks. Maybe it's profit taking, maybe to some degree it's front running expectations that the Fed may not be cutting in December like everybody thought was a sure thing just a month or two ago. But to your point, we had a big rip in September and October across the board. And so it's not unusual to see people ringing the register on a really good year, especially if they've been holding all year or since last year. So that seems to be some of the pressure. I will say I'm surprised, Cory, that some of these markets are selling off as hard as they are, especially the precious metal stocks, in light of what appears to be the best quarter that they've ever had on the planet Earth. And so, with the biggest margins in gold and silver that we've ever seen, and quite a big difference between Q3 to Q4, I'm honestly surprised that gold stocks and silver stocks have sold down by 15%, 20%, some stocks even 30 and 40% pullbacks in the last couple of weeks. It seems a bit extreme to me.
See, I'm still seeing the majors is holding up decently. Like Newmont is down 10% from its all-time highs, very much following what the gold price has done. That being said, look, there's so much money I think that came into this sector, and it's something that we constantly see, I think, in any sector, but especially metals when you have a defined price for whatever these companies are mining. If that metals price loses momentum, if we're not talking about all-time highs week after week, month after month, investors move on. We've seen a lot of new investors in the space, and quite frankly, even the people that we talk to, a lot of the generalists, technical traders that were very much playing the sector to the upside, they're on the sidelines right now. They still have some positions, but their positions are smaller than they were a couple months ago. And they are waiting to see where that next leg moves. We have seen very good moves in these stocks. And I know we can keep saying, look at how good these numbers are. I truly believe that these majors need to start spending this money. That gets a bit more of the FOMO vibe going for investors because it frees up a whole lot of money in this sector. We've been talking about it month after month, quarter after quarter. When are these majors going to do something? They're still taking a very cautious approach. And I think that also ties into investors saying, well, you know what? If the metals prices aren't hitting all-time highs, there are other sectors that I'm going to be in that are much larger sectors, even if those are still correcting. So to me, this is to be expected. Honestly, if we're not talking about all-time highs for metals prices, these stocks are going to drift and the smaller ones are going to drift a bit more.
Well, I completely agree with you that we've lost momentum, and then that causes generalists to exit, and some of them had just entered, so maybe they got in and became a bag holder and got out quickly to limit their loss, or maybe they made some money and they rang the register to get out. And if the metals aren't making all-time highs, yeah, you lose that algo trade, you lose that momentum trade, you lose the people that are the Momo traders. But I'm going to circle back to what I think is happening in Q4 as far as the earnings, because I think it's a significant opportunity for investors to consider. Gold is in the Q3 averaged around 35.50, 35.60. Most of the reports I looked at what miners were selling it for, it was below 3600. We're at 4000 gold and we have been most of this quarter. We were up as high as 4400. Yeah, we've pulled back to 3900 a couple times, but we've been in the 4000s. That's a $500 extra on top of their margins, and their cost did not go up nearly that much. In fact, energy costs have stayed muted. In silver, it averaged $39 in Q3. We're at $50, Corey. I mean, this is like $11, and we've talked about a lot that $1 or $2 to a silver producer or a primary silver producer is meaningful. $2 or $3 is very meaningful. $11 spread between Q3 and Q4 is the biggest gulf I've ever seen quarter to quarter. And yet a lot of these silver producers, the smaller ones, are down by 20, 30, 40%. They're not looking like Newmont. They're looking way worse. And I've never seen such a disconnect between what the miners are actually making as far as margins and the share price depreciation. So while some of the Momo investors may have gotten out, while some of the generalists may have gotten out, I expect to see, like we did in Q2 and Q3, a lot of these silver stocks and gold stocks bounce big at the beginning of next year when they report in January and February.
Yeah, we'll need to see how it plays out. I think it very much still depends on what direction the underlying metals prices are going. But look, a lot of these silver stocks, at least the big ones, again, the juniors, they're selling off. They're juniors. I realize that they should be doing better, but quite frankly, they're such small stocks that I don't think a lot of the outside money is going down into these couple 100 million market cap at most companies rather than looking at the big guys. And you want to look at some of the big guys. Fresnillo has gone pretty much straight up this whole year. A lot of the major silver miners have gone straight up. So in a way, this is still a bit of a consolidation. And again, in a way, I still think these major miners, they're weathering the storm pretty well. Fresnillo, from off of its highs, is about 13 to 14% down. That's not that bad when you consider that it is multiples higher from where it even started the year. It started the year right around $600 and change. Wait, is that right? Yeah, it's $600 and change, and right now it's up at $2,200 on the London exchange. So I think a lot of the easy money has been made because of how well the metals prices have done. And yeah, hopefully these earnings get investors interested. I think even more so if we started hearing on the back of these earnings that these companies are saying, we're going to start spending. We're going to get out there. We're going to start accumulating. I think that brings more investors in. But again, it does seem like very much so the majors are holding up much better than the juniors. And that's just what happens when you're in a corrective phase.
Well, I would submit that's why there's an opportunity in the juniors right now. If you just look at Fresnillo or just look at Newmont, that's one picture. But if you look at Silver X, if you look at Impact Silver, if you look at Guanajuato Silver, if you look at Avino Silver and Gold, these things are down 20, 30, 40%. So I guess what I'm saying is I'm seeing personally more opportunity in these junior silver producers and the same thing in the gold producers. Some of the junior gold producers are down 20, 25%. That's way more than Newmont. So I think that the edge is not right now in the majors. I think the edge is in the junior producers and then the developers, same thing. I mean, we've seen some M&A, so some of the senior companies have been spending, but the deal where Core is taking over New Gold or where Fresnillo that you just mentioned is taking over Probe, they're taking over Probe for $56 a ground US, an ounce in the ground for gold. That is a way lower valuation than many investors wanted to see Probe taken over for. And so I don't know that they are spending to the degree where M&A is actually exciting right now. And if the M&A is going to be like that, I'd prefer not to see it personally because we want to see accretive transactions for the juniors. And that Probe deal was not very accretive, in my opinion. So I'm excited to see juniors maybe get a re-rating as people digest and maybe just get used to higher metals prices. I don't think they even factored in $3,500 gold or $35 silver, much less 4,000 gold and above, much less $40 silver and above. So I guess I'm just hopeful that as more time goes by, as more analysts run these models, as you run the NPV at current spot prices on these economic studies, I think there's a big opportunity for juniors, more so than seniors, to re-rate higher.
Now, how do you view some of these juniors? You threw a couple names out there, and they're off their lows. They have sold off a lot, so they're well off their highs. But someone like Guanajuato, they were down at 14 cents earlier this year, currently trading around 35 cents, reached a high of over 60 cents. But even SilverX, I think SilverX has done quite a bit better than Guanajuato. They were at a low of 11.5 cents at one point, and they went the whole way up to 70 cents, and they're sitting around 50 cents a share right now, a little bit under that. But they have re-rated in a way. I know they're coming off very low prices, but do you look for the stocks that haven't moved up as much, haven't put that 2, 3, 4 multiple on them, and dive into those? It almost feels like you're going to the bottom of the barrel when it comes to some of those if they haven't moved in this environment already.
Well, I think you want to look at it two ways. You want to look at it as what happens to their margins at the higher prices. That's the base level. That's true of all the stocks. But then also, what kind of growth do they have on tap? And something like SilverX, just as a case study, they are planning on upping their production substantially over the next 18 to 24 months, and then especially over the next 3 to 4 years. They released a very audacious plan to almost quadruple production over the next 5 years. So I'm looking at these higher prices. Sure, that's one envelope, and then the other envelope is what about the production growth? There's certain companies that are status quo on production, mostly the majors. The majors are not growing production. I think it's these junior producers that can grow the production the most. I mean, we talked about Avino. We've had Avino on our show. They're planning that La Preciosa mine comes into production in the not too distant future here, and that's going to substantially raise their production profile. So I think you need to look at it through the lens of, yeah, what did they do last quarter? What did they do last year? How are those metrics? But also, how are these metrics going to change as they continue to grow? And I don't see growth in the majors, but I do see growth on tap in these mid tier and especially the smaller mid tiers and the junior producers. I think that that's something that's not really being factored in. And when you look ahead and if you're a forward looking market, that's what you need to account for when you're valuing the company, not just the production today, but what is the production in 2026 and 2027. And if it's anywhere close to these metals prices, it's going to be eye popping growth and revenues because it's going to be metals growth and production growth.
Yeah, I really like and prefer that sort of production growth because you're right, the majors have been boring. It's hard for them to grow production, and quite frankly, even Newmont, the major, is decreasing production. They're getting their costs under control, but in this environment, produce, generate some more cash flow. Avino's been such an outperformer. Look at that chart too, even though it's off of its highs. One thing that stands out to me with all these charts is the volume. Holy, is volume come in? Volume is 4 or 5 times the amount what it was really forever. So clearly some people are paying attention. And that's one thing I wanted to outline here is that demand for gold ETFs, recent report by the World Gold Council really stood out to me because we hear from all kinds of people saying that no one's paying attention to this sector. The generalists still aren't in. Some of these numbers from the World Gold Council were quite mind-blowing. They're record quarters. Q3 was a record quarter for gold-backed ETFs. Global inflows $26 billion US, and the US portion that contributed to that was 62%. We saw about $16 billion go into gold-backed ETFs. The US market, the North American market, is flying right now, or it was in Q3. Even average daily trading volumes of COMEX futures and options were up 35% year over year. And North American ETFs, so dominated by US funds, they were up 109% year over year. This all just reminds me of what Jeff Christian over at the CPM Group says, is that we can look at all these other factors like coin demand, central bank demand. What really drives metals prices is investment demand. That to me just shows how much investment demand there has been in the sector, which is good. Don't get me wrong. This is all good seeing this money flow in, but we do need to understand that it's still a small sector. It always will be a small sector, in all fairness, I think. People, I'm sure, will debate that, but mining is mining. It's been around forever. It's going to continue to be here, but it's never going to take over for something like the tech sector. But we have seen a lot of investment demand come in. And when we see numbers that are historic, there are cooling off periods. No clue if this is an actual top, but a cooling off period that could last a few months does make sense when we see just how much money came into the sector. Shad, what do you think when we see these sort of numbers and that sort of North American participation?
Well, I think it clearly demonstrates that it's not just buying from the East, which we keep hearing that it's just Chinese buying or Indian buying. Clearly, there's the Western investors buying into these ETFs and taking a toehold. And as you know, we talk to generalists that are trading GLD, SLV, PSLV. They're using those ETFs and they're positioning in them for short periods of time or for position trades over months or quarters. So there's clearly Western investors in the mix. What I guess bothers me is what does a top look like? And we've talked about this before. Nobody ever wants to talk about the potential of there being at least maybe an intermediate term top. But when you look at the silver chart, it got up to 54, which was very exciting. It's the highest level it's ever been in nominal terms, but it does kind of look like it could have double topped there at 54. It's a potential. And I don't know if all of this action and all of this volume coming in signifies kind of a blow off top. When you look at gold, when it got up to 3,500 and then in April, and then it went sideways for 5 months, it consolidated through time. That's healthy. And then it had a rocket ship ride higher from August, September, and October. Did it go up so much that it needs to consolidate for not just a few weeks, but possibly months? Or what if this becomes a long-term top? The BP GDM, which is the bullish gold miners percentage index, was it buried at a reading of 100 for a couple of weeks. And the only other two times I've seen that in the last decade was in 2016 and in 2020. And both of those became multi-year tops. So with all of the conferences we've been at being at a fever pitch, whether it's Beaver Creek or the Metals Investor Forum or even the New Orleans Investment Conference, everybody's all jacked up and all bulled up. All this volume's coming in, all this participation. A lot of these stocks had big moves. What do you think, Corey? Is it possible that we aren't just in a little correction, but that maybe we are in a topping pattern, or are you more constructive that this is just the pause before the next big run higher?
I have learned over my years in this sector to never predict the future, but right now, in terms of trading strategy, I'm not trying to catch these stocks and trying to pick an absolute bottom, as we were talking a while ago. And look, none of this is investment advice. I did trim a lot of positions, built up some cash. I stopped going into private placements. I have been very selective into what financings I've been in, where at the beginning of the year, I was taking almost everything that came across my desk, especially smaller ones. It seemed almost more like placement financings. Now that's really slowed to me. I'm happy to sit on the sidelines with some of the cash. And yes, there are signs that this could be a prolonged pause, maybe even a top. Only time will tell. But there's also a good chance that the metals price could move up again. Historically, we have seen in the major gold bull markets, which we go back to the 70s and the aughts, right before the top in 2011, gold went up around 7 times. Right now, gold has gone up about 4 times. So there still could be another leg higher, another blow off leg. That being said, again, right now I am very much in a pause scenario, looking for a bit more of an uptrend to be established. I still hold some positions, a lot of positions, but I'm not adding to them right now. I'm happy with my cost base. And if I see breakouts or a bit more life in the sector, happy to jump back in. But as I've shared a number of times on some of our interviews, I think the next few months are going to be challenging, especially for the juniors, because of how many financings were completed and how many new shares are going to be coming into the markets. A lot were done on life financings, but there are a whole lot of 4-month hold periods that the market needs to digest. And if we're digesting all this extra equity that is coming into the market without a higher metals price supporting that, that's going to weigh on these companies and the way that news is being viewed. News rather than everything being a buy. Share rollbacks. They were a buying event a few months ago. They're not going to be a buying event now. Now you actually need good news, but there is a lot of news on tap. Hopefully that news follows through, but I do foresee a multi-month period of hopefully sideways consolidation, but only the charts will tell and only time will tell if it falls further. But yeah, in terms of what I'm doing, it's not diving in to everything that crosses my desk right now. It's very much a selective mentality. And on top of that, any major spikes in share prices that I'm seeing right now, or share prices that are spiking before key news events, those are trimming opportunities as far as I'm concerned.
Yeah, just personally, I look at things not really on a day to day or week to week, but maybe quarter to quarter. And I'm looking ahead to the first quarter already as being the time that's usually seasonally strong for the precious metals. Now, I don't know if we'll see that same seasonal pattern because I don't think we're going to see a big tax loss selling season. But a lot of people reposition at the beginning of the year. It's typically a good seasonality time for the metals prices themselves. There's some fundamental reasons for that, but I just know that every year I tend to buy this time of year between US Thanksgiving and Christmas, and I tend to sell in February to early March. And I think that this may be an extreme opportunity to at least play a bounce, whether it's the top right now and we're going to go gradually down over years, or whether it's just a small blip on the screen and a larger bull market. I still think that you can use these seasonal patterns to some degree, quarter over quarter, to your advantage. So I'm going to be looking to personally nibble at positions that have pulled back by 20, 30, 40% that I did trim in September and October. And I'm thinking about buying some of the exact same positions back with the hopes that in the first and second month of Q1, January and February, that we see those re-ratings higher, like we talked about, either in the producers or the developers. So I'm looking at it as a multi-month potential opportunity to buy some dips in the companies that have the most growth on tap and participate in any potential spring forward that we see at the beginning of the year. But that's not investment advice, and it could definitely go against us and keep pulling back. Well, like you say, only time will tell.
Let's move on to some other resource markets. As we like to not just cover precious metals, copper market, that's still been quite stable. Copper right around $5. The stocks, again, the juniors are very much lagging. The majors seem to be doing just fine in my eyes, but it's a smaller world of stocks out there. Uranium, we like talking about uranium. That market seems to have slowed a little bit and is also in a corrective phase, which again, a lot of these other markets are in corrective phases. Interesting to see lithium moving high. I've seen a lot more interest in lithium stocks and the lithium market. I'm not heavy into lithium. I do see the need for batteries, but I also think that this DLE technology, when it is mastered, is going to turn that market right on its head. But either way, Shad, any other markets that, resource markets, I should say, that are catching your eye that could have an opportunity?
Well, let me just respond to the lithium thing. I think it's noteworthy that since the April low when we had the tariff tantrums, that the ETF, LIT, was down around 32 and now it's at 62. It's essentially doubled since April, which is strange in lithium because there's very little chatter about it. It was really oversold, so sometimes commodity space just gets so oversold that it just has to bounce in response. To your point, I think direct lithium extraction could really put a damper on things. But hey, you got to give it up for lithium coming out of the back as a dark horse from the behind and surprising a lot of people. With uranium, it's a sector I follow very closely. We've had uranium companies on the program. We've talked to generalists that follow the space. Everybody's still bullish for the fundamentals, very much like copper, where the supply demand makes a lot of sense. But the actual spot price, which people track, has gone from the mid 80s to the mid 70s, and that's hurt the sentiment in the sector. I don't think that's as important as long-term offtake agreements, which are still have floors and ceilings that protect the companies. But it's, I think, an opportunity to be nibbling at some of these uranium stocks. I am personally doing that in my own portfolio. And then as far as copper, just the takeaway I have there is how well COPX has done as an ETF, which is the large producers compared to the price of copper. I mean, copper has really not done much. It's waffled back and forth on each side of $5 a pound, which is a great price for copper. But those producers and COPEX, again, if you look at it in the April lows, it was around 32, and now it's up to 60 and some change. It's almost 61. So just the fact that COPEX has doubled since April at a time where the copper price has been a little volatile with the tariff news, but still it hasn't broken out and gone crazy, I think shows how well these base metals producers are doing. So I'm looking at base metals. I'm looking to see, can nickel pull a lithium? Can nickel come from behind and surprise people? Tin has been surprisingly strong. Even zinc, which is a boring metal that nobody cares about, has done incredibly well recently. And zinc's important for the silver producers because a lot of them produce silver, but they also produce a lot of zinc and a lot of lead. So the fact that base metals have been strong at a time of year where everybody thought the economy was going to be weak and where we'd be in a recession, it just hasn't played out. We haven't seen the recession, and the base metals being strong tells me that there's still hope for economic growth.
Yeah, the base metals seem just fine. Again, Copex only about 12, 13% off of the recent highs just back in October. So that's also doing just fine. Again, it's a corrective, maybe slowdown phase for what has been technically a historic year. When you see charts coming out that show the best performing asset classes and best performing areas, and at the top of that list is gold stocks. It's not sustainable year over year, but it can keep going in the right direction, but you do need to weather some storms. So I guess let's wrap it up with any big predictions to take us through the end of the year into next year here, Shad.
Well, like I said, I think that there's an opportunity to potentially buy the dip in the juniors more so than the seniors as far as gold and silver stocks, playing for the Q1 run, playing for the seasonal bounce we get in Q1, and in particular in the small producers, the just huge margins that they're making right now that are not being reflected in their share price. I do think we will see a resurgence in some of the critical mineral stocks in Q1. Right now, the rare earth stocks, antimony, tungsten, boy, they are beat up to a bloody pulp from where they were just 1 month ago. Some of these stocks are actually down 40%, 50%. So if a stock gets chopped in half, that was the flavor of the day just 1 month ago, you don't want to catch the falling knife, but I guess I'm looking at it as at one point they do have to bottom, and it's not like we solved all the problems with the global supply chain. So I still think some of these specialty metals may have a little more upside in the year to come, and I'm looking at Q4 as a way to nibble at them while there's blood in the streets with the hope of getting a bounce in Q1 of 2026.
So what I think is coming, and this is way out of left field, is that I actually think we're going to see, with this correction in the broad averages, some more positive, softer comments coming out of the White House to support the markets, especially as we start to move into midterm election season. That is later on next year, but I actually think that could be supportive of the markets, the broad averages, and some other certain metals sectors. That's going to be hard to predict. I also think that we're going to see potentially a new world class discovery coming out of the sector. There's a lot of money being put into the ground. There's a lot of drilling in a whole lot of different countries. Yes, there are a lot of companies working up some old projects and looking to move those into production. It's almost starting to become the norm of what you hear from these companies is that we're looking at early stage production. We're looking at some sort of any sort of production to bring in some cash flow. But I think there are companies out there that are drilling a whole lot of other targets. And the drill results we've seen recently have been very, very good from a wide range of companies. I think we're going to see some tier one discovery be made in the next 3 to 6 months, maybe, from all this drilling. We'll see what that does for the market, but I think that could help another leg higher. We'll see where this all goes. But hey, everyone, thanks for tuning in to another KER Market Quick Take. Please share your thoughts with us. Shad and I will both post our emails in the show notes. Share what you want to hear us talk about, and also let us know what you like, and even more important, what you would like to see improved with these market quick takes. Thanks for tuning in, everyone. Have a great rest of your day.